Alrighty. Last day of the year. I won't be talking to you until next year now. This is Doc from North America. So you have to wait until 2022 after today to hear me. And good morning, good afternoon, and good evening. I bet some of you it's already 2022, especially our friends down in Australia and New Zealand, in that arena. I think Singapore is just right around the corner, just about. Maybe another hour. Places in India. Before you know it, it'll be, it'll be everywhere. But anyhow, let's get rolling along. And what we see here this morning is let's go to J4X. Where's that at? Come on, you can jump up there. There you go. We see that long, slow, leaky slide. Like I said, it could be the A, B, and then C, and then they're done with it, and it turns back up and heads back to the range, or maybe they have an idea about a new range. It's so hard to say. We'll only know as the math tells us. That's what it really comes down to always. What the math says. Let's see now. Let's put up the chat line. I just realized the chat line is not up. There is the chat line. So that's where we stand at this point in time. Is that as you can see on J4X, the pressure on it right there. You see the same thing going on over on the Chicago Quant right there, and you can see on the weekly on Chicago Quant right there. It's going on the second week of a sell with no problem. And so it's just kind of like a slow, steady hum, Somehow I see some here like, why isn't there a sell there? There's no sell there. There should be a sell there. That's right, that's the sell. And then that did go into a buy right there. And then the next day again it went into the sell again. So let's fix that. So that's the sell. Right there, let's fix that. Okay, there we go. And then there's the sell again. And that's where we've been since. And so when we go into the fact check spreadsheet, I was looking at that. Wait a minute. It doesn't seem to be making sense here. And that is line 21. You can see that 7 days now, and the sell there on line 21. See that right there in the sell. So, and 1 week of the sell is going to go to 2 weeks of the sell. Jordan, good morning, good afternoon, and good evening. You got 1 hour still on Australia. Okay, I didn't. Sometimes it's kind of. I could have sworn it was 7 in the morning. Must be New Zealand. Must be 7 in the morning, like Christchurch and places like that. And then it's another hour to you guys, and then I guess American Samoa is probably already there, and so forth, right? So you're in Australia. That makes sense to me. Okay, excellent. I'm impressed that you're awake for us half the time, because it's 11 o'clock at night for you. So thank you for being a watcher and involved with our webinar. I know we've had other people, from Australia, and where else is it? New Zealand and so forth. So it's tough hours to watch, the webinar and have a chance to talk live. But I'm always impressed. I would do the same. I've done things like that. Where I'm interested in something, and I'll get up at 2 in the morning with no problem at all. So let's see, where do we go from here? Yes, that's what we're seeing is that pressure on the Swiss, and let's just take a look at it on the weekly too on the J4X here. Right there. Oh, Jordan, did you experiment a little bit with the contract or tick charts versus the hourly or minute charts? I hope you took a look into that a little bit. Try to focus in on that. I think you'll be better off if you do. I think you will. All right, I am eating a Christmas cookie. I'm having my tea. So, oh, it's a mint one. That's neat. Let's go over to Euro. Now the euro this morning, yesterday it tried, it looked like it was putting some pressure. It's been kind of odd the way it keeps on bouncing around trying to get into the sell and then finds a way into a buy, whereas the cable has been very firm. But let's go to the euro first. Right there we go. And you see, let's do it over here on Chicago. Better flavor of it. Like so. You see it's moving up a little bit. They tried to knock it down again yesterday, but it was a red. Well, there's the red and there's the green, so it didn't go into the sell because of that. But they tried, and we were going to have a what do you call a red line over here if this line had stayed underneath the zero line, but it did not. It's back plus again, and it's trying to lift back up. So it's going after that part of the range. And you can see the weekly is holding on by a hair of its chinny chin chin in a weekly. Hey, I might be. Are you guys like out at New Year's parties listening to me? That could be part of it. Listen to Crazy Doc on New Year's Eve, getting a little toasty at the same time. That is funny. All right, so you can see there with the euro, it just seems to battle with that situation. And there's the weekly. You can see it here on J4X. It's punching through. Was it last week for us on the Chicago? That's kind of interesting. The pressure didn't build up fast enough on that one this time. But we'll see. I think it might be. Well, we don't know. Every time I want to try to interpret my charts this time of the year, it's not worth it. May I ask the time where you are? 7:37 a.m. I'm in southern New Jersey on the east coast of the United States. And I have been awake for 3 hours. 3 hours? Yeah. 3.5 hours. I've been up since 4. So I've been awake for 3.5 hours. Alright, so there, I'm a little surprised that this had not got going stronger since we were strong on it over here, on the Chicago quant. Now let's drift over to that cable. Right there's the cable. You can see. Now cable didn't. This whole thing has been like the opposite of what I was expecting. I kept on thinking the cable was going to jump into the buy before the euro did, but it went the other way around. Now, obviously, it looks like, very cleanly it's going to be in a weekly buy tonight, unless they do something like there's this. And we have, let me warn traders out there, don't feel comfortable until it's all done. Because I've seen where everything is fine until like the last 10 minutes of a trading day, and they can clobber something or take it through the roof. I've seen that too many times at the last day of the year, because of the thinness of the market. But you can see here, looks very comfortable. It's trying to go up on the weekly, on the daily. You can see here on the cable. Let's see where's that? There's daily right there. It's holding firm. You can see here on Chicago Quant. We talked about this throughout the last week, thinking that it was going to get passed through the blue line and got up to the yellow, and then possibly even challenge the green. Especially if it's going to close in a weekly buy, I would expect to see a little test of the blue line possibly, or just a quick rocket shot up, one or the other. Yeah, so I'm on the east coast of the United States, in southern New Jersey, about it's about 150 miles from New York City. It's like a 2-hour ride, and or I guess you could say it's like how many kilometers is that? I'm trying to think. 150 is something like 210 kilometers. I think it is about 210 kilometers from New York. And we have a major highway that's a pay road that's right near us. It goes directly to New York. You just get on it, and the next thing you know, an hour and 45 minutes later, you're there. So, and that is in Washington, D.C. is about 2.5 hours to the south of me. So we're smack dab in the center, about 25 minutes away from Philadelphia. On some of the tall hills around here, we can see Philadelphia with no problem. Let's see what else we got going on here with the cable. I guess that's about it for the cable. You know, it looks like it should close in a weekly buy. We'll see what that means. You know, like I said, this is the end of the year, so what happens is that, you know, you don't try to interpret this as a trend. Just interpret it as just the end of the year. Taxes and so forth have everything tangled up, and the math is doing its best to keep us honest, but there are 2 times of the year, for a couple of weeks, the math gets a little sloppy. This time of the year, and was it late July, and a week or 2 into August, it gets a little sloppy because there's just not much participation. Oh, you're in South Australia, like no? Oh, okay, Adelaide. You know, I love this. There's this one. I watched some Australian TV shows. I like ABC, you know, the channel, and one of my favorites was Rake. I really enjoyed Rake. What's his name? Clifford Green. He was good, and I thought that was it was pretty interesting. Also, I was a very big Crocodile Dundee fan, and I can't tell you how many times I think was it the Sydney Exchange offered me free seats, 3 exchange seats for at one point it was two free exchange seats if I would become a member there, and then at one point they offered me 3 exchange seats if I would become a member there. So yeah, I was tempted many a time to go. I just couldn't get my former wife to join in on that idea, and that was a long time ago. But anyway, that's where we are, and that's where you are. Adelaide, nice. Yeah, I listen to. Sometimes I have one of those. I have a website that I follow. It has radio. You know, you put your arrow on it, and it plays a radio channel in that area. You know, and so I listen to radio around the world sometimes too. Yeah, so I live an exciting life. That's right. All right, so there you go. You see that cable doing its thing, moving up just as well as all the other products against the dollar. The dollar just seems to be kind of leaky, and then we'll see what the dollar really does going into the next 3 or 4 trading days of next week, which will be obviously 2022. So that is where we're at. Let's see. Let's go over to the next one. Let's jump over. From there, we do is this. We go to Turkey. We take a look at the Turkish Lira in 2 different pairs. One against the dollar, one against the euro. We find the euro now the leading indicator more than the dollar, but you know, we watch both. And let's put that up there. And there's the dollar Turkish Lira. Still doing that firmness that we talked about yesterday, how they're giving free puts out to investors now. So that's what popped the stock down and made, not the stock, the currency down, gave it strength, but notice our weekly is not that impressed with it. And let's take a look at it over here on J4X. Let's see, Turkish Lira dollar. Right around here somewhere, there it is. So there's the Turkish Lira dollar. You can see here the strength, and you know it's pushing back up after this. They declared that they're going to give free puts to investors. They haven't really clarified exactly how that works. We just know that they're going to what they said is you buy the Turkish Lira, and then what happens? Let's say the Turkish Lira loses money, and we will give you the difference from where you purchased it. That's how it's a free put. So you can imagine hedge funds are out there right at this moment in time thinking, oh man, how do you capitalize on a free put? And believe me, they will figure a strategy out. And so I was saying to Giannis, I'm not sure how well this will work out in the end, but it could slow down the craziness for a while. Let's put it that way, because the thing was really going on a rampage. I mean, it just was breaking out and just refused to calm down. I mean, you know, in November, here we are in less than 10, and here we are at the end of December. You know, 6 weeks later, the thing's trading at 18. So wow, you know, nobody can put up with that. So they had to do something. They had planned this. They created this strategy. I mentioned it yesterday. They had created the strategy back in 2018, 19, but they decided not to go with it. At that time, the Turkish Lira was trading at 6.5. They probably thought, that's nothing. But now, in hindsight, more than likely they would probably been better off. We'll see. I'm not counting it out as bad because they're only giving the difference of what you purchased. In other words, their objective is to get people to buy their currency. And that is not just for like purchasing product, but to actually hold the currency. Well, if the government is going to tax the country and pay for this, which is what they claim they're going to do now, they're giving out a free put, protecting investors. So not bad. It's not like they're doing it in gold or something like that. They're doing it in Turkey. They'll just print more Turkish lira. It's paper. The puts are basically paid for by paper. So it makes it a lot easier. It's like QE. It's a form of QE, basically. That's what it comes down to. All right. From there, we jump over to the Turkish Lira on a Euro Turkish Lira pair right there. And we'll put that on here. J4X right there. And you can see, the strength of it right there. You can see it on the fact check spreadsheet. That's right there, line 17. Yeah, line 17. You got 3 days in a buy, and you've got 15 weeks in a buy. Both the dollar and it are 15-week buys. Looking very firm on a daily basis right here on J4X. And then we'll throw the weekly up there and see what that looks like right there. And you can see how on Chicago Quant it never pierced. Never pierced the zero line. So it has stayed even with this big slam. It's been trying to tell us, we went into the sell here off of this big slam Sunday night, and it went down, but you can see here it's going back into the buying. Pretty much between here and there, and this up, here's right there. It's almost paid for the loss if you had a long right there. So that's pretty good. The math is doing a good job of protecting it. And you can see here they pushed it through the white line. See that right there? And so they're trying to throw it into a weekly sell. I'm not sure how well that's going to last. More than likely next week should bounce back up. We'll see. Like I said, there are funds out there, I am sure, are trying to work out strategies right now. When you give a financial community a free call or put, they will climb on that like white on rice. Indeed. Just sipping the tea this morning. All right. What else can we say here? I don't see much more about that, but this is the way we're interpreting the whole action. Not really seeing a lot of writing about it right now. I don't know if they've passed any more policies, but I'm sure we'll see action in the currency before they do pass any real action. Now let's go over to Canadian. Let's see, where's it at? Put it up on J4X first. We go from Turkish Lira always to Canadian. Unless someone asks for something, if you want to see something. Yeah, and Robin's 6:45. He's in Chicago, so you got me at 7:40. Actually, it's 7:49 right now, my time, and for Robin it's 6:49. Let's see, Canadian right there. Okay, so Canadian went into the sell yesterday, and you can see that pressure right there. Pushing down. What else can we say about that? I guess not much more than that. Oh, I know. Look at that. We are flirting with the weekly sell number right there. We are underneath it. Again, we'll see how this all plays out. I can't tell you how many times I've seen crazy fraud, crazy New Year's Eve trading, and the next thing you know, it doesn't look like anything like this in 4 days. It's like, what? I could have sworn it was going to go long. Or I thought it was going down. It looked like it was going down. And you can see here, they're trying to do the same thing on J4X on the weekly at the moment. Shoot back over to the daily. can see there, they never even had a green hinky like we did, where we had that buy for a day and went back into the sell. This thing's just been straight down. So the pressure's been on the product. I would imagine, here we are, we see Canadian gaining value. So in my head, I automatically start to think, well, maybe the South African rand will be moving down against the dollar, and maybe, gold and silver and oil should be moving up. So let's drift over, and I'm finishing that cookie off too. Let's drift over to crude oil. We'll do gold, since there's gold right there. And let's see what we got for that. There's gold. So at least we're trying to take out this November trade right there from the gap. That would be nice. We've been in a weekly buy or daily buy right there for a while now. And let's see, what else can we say about that? Oop, wrong one. I'll just go like this one right here. No, not that. Here. There we go. Let's see if we can get this to go down. There we go. So you can see this thing holding up pretty strong. Not explosive in any way, but at least it's going up. What really caught my eye this morning when I was doing the morning charts, let me scroll over and show you. Okay, it's a little bit further south again. But at one point it looked a little bit closer up. But it looks like they're trying to throw it into a weekly sell. I mean, I don't know what that's all about. Like profit taking into the metals market. You can see here on the daily here it's looking fine. And I bet over on J4X, when we look at the weekly on the J4X, I'm sure that it's going to look a lot more bullish than we are on the weekly. See, we're flirting with the sell. Here it comes. Yeah, see, it's looking a lot more bullish. And we'll see if there's a change. Again, next week we'll be really back to normal, I want to say. If you can call the quantitative era normal on any level on the financial markets. But we will be seeing that. Indeed. Let's see what else we got going on there. So let's see, somewhere else along the line, yeah. Where else? Okay, yeah. So Canadian, like I said, is punching down, and we see on J4X, gold looking firm. Let's see weekly now too. And let's just put the daily back in there. You can see the strength on that. You can see how it matches up. It's doing a good job joining in with the gold reindeer games. All right, so from there, let's take a quick look at oil. Let's see what oil's looking like right there. And let's find it over here. Where are you, oil? Right there. There we go. A little pressure on that. A little surprising that there's pressure on it. But there is. But you can see also at the same time, not bad. The weekly looks like it's going to flip back into the weekly buy. Let's see what it looks like on the Chicago, or the J4X. Go to J4X weekly. Right there. Again, traders, try not to get too convinced. There's a real trend here right now. Don't get too convinced about it. Let's just wait till next week. Saw an interesting article this morning where someone was saying they expect volatility in the equity market. So, something kind of the person that says it has a good track record. So I guess we're going to see some action. And a lot of people are predicting. A lot of these money managers are predicting things like a firm front year, the first half, and a weaker second half. Things like that. I don't know. I'm not totally convinced how that all is going to play out. We always try to follow the math. We try not to. It's fun to look at the stories, try to understand what might be going on, but in the end result, it's usually the math, and the math in the end goes, oh yeah, no wonder it was long, or oh yeah, why now I understand why they were selling it. It's like trying to interpret it is a tough game. It is. It's very tough. That's why we try to trust just the math and not the stories. Stay away from. Remember, Jordan, we were talking about that fundamentals. Fundamentals have left the building ever since the era of quantitative easing. Fundamentals are just I don't know how to put it at this point, but they are just very disappointing, that is for sure. All right, from there we jump over to the currencies again. We go to the South African Rand, as I mentioned. And we'll put it up on J4X first. There you go. There's the South African Rand. It's a weekly chart. Let's put it up on Chicago. Rand. Let's see here. Where can you see it? Where are you? ZAR. How hard is it to find a word that says ZAR? There it is. Alright, well, it's sideways, but it's still firm. You know, I hate what that says to me psychologically. You know, it seems like, you know, when this thing is going up, usually metals are going down, and that's really a disappointment. You know, because I would like to see the metals complex get some action in it on a positive side, not just go down, because we've got like 6-7% inflation. It's like, you know, that's right there with what we just said. The fundamentals just don't match to the reality around us. Matter of fact, what did I see? The 30-year bond is trying to go into a buy or something like that. It's flirting with it. It's like, what in blazes is going on here? Doesn't anybody pay attention that we're having inflation? You know, are these trading desks so captivated by the central banks now that they just cannot get their game together? I mean, you know, I guess, you know, I remember one time, I mean a long time ago, back in like 1983 or something like that, 82. No, it was 1981, and I was looking at gold and oil charts. Back then, they had a really good, strong correlation. Oil went up, gold found a way to go up. Oil went down, gold found a way to go down. You know, they were correlated very well, and they had a ratio, and there were, you know, there were the extremes on both sides, of course. You know, with the ratio and where it would go and so forth. But in the end result is that there was some continuity and consistency there. But in this era, there is none when it comes to, you know, the bad economics with the metals complex. Not counting all the COVID thing going on. You would think, you know, minus the inflation, you would think that they would be like, you know, 2,300, 2,500. I mean, the world is tangled in this pandemic thing going on. You know, real or not real, it doesn't really matter. The world believes it's real. So why aren't they buying gold? You know, it's like, it's so weird. And at the same time, 6% inflation. Why aren't they buying gold? You know, what's my gold doing? It's flirting with the weekly sell right now. It's like, what? You know, it's like, that's crazy. It is insane. But anyway, that's what it is. We have to follow the numbers in the end result. You know, as much as I would want to talk about fundamentals and logic and so forth, forget about it. You can't. And you can see it right there. Look at it. It's going up. It shouldn't be. You know, gold should be roaring up. This thing should be roaring down because the objects that I just mentioned. But we don't get it. I mean, the marketplace just doesn't accept it. So, wow. Not counting the fact, can you imagine we have 6% inflation, right? And here in the United States, we're trading our bonds with a 1.5%, not even, what am I saying, 1.5? 10 years trading at 1.4 yield. In other words, it yields 1.4%. I mean, back, you know, no more than 16, 15, 14, 13 years ago, if we had 6% inflation, interest rates would be 6.5%. And not counting, don't start me on the European Union and the rest of the world, where we see over 15 trillion invested. 15 trillion, not billion, not million, but with a T, trillion, invested in a zero return. Not only is it a zero return, you got to buy and pay interest to the government to buy their bonds. So you go and buy a boon, a German boon, a 10-year boon, and you put out your money, you buy the boon, and then you have to pay the government interest to own the boon. Talk about the world upside down. Ugh. You know, it'll be funny because I think this is all going to change over the next 2 or 3 years. And it's going to be really funny. People are going to talk about this era, like quantitative easing, and they're going to be like, I can't believe they did that stuff. And I don't understand why people weren't upset. You know, people are going to be like second guessing it when finally everything goes back to normal. They're going to be like second guessing it, going like, I don't understand. How did people put up with that? Why would a money manager buy, you know, $1 billion worth of German bonds and pay interest at the same time to the German government by owning those bonds, you know, the bonds? You know, I think we're going to change, and basically the end result is, you know, we're going to look back at this and we're going to go, that was the weirdest 14 years you ever saw in financial history. Who knows? Maybe, you know what? Think about it this way. If I'm right about what I think could happen, you know, and I think it's a high probability, the metals complex must lift. You would think that finally they'll just, you know, one day you just wake up and find it up like $300 higher. You know, just like, you know, you would think that would be the logic to the action. So anything, you know, I mean, one thing's for sure: don't be short the metals complex. You know, because you could, you know, how we showed you, you know, let's just go back to the Turkish Lira. You know, one moment, where's that Turkish Lira? We're going to show you the Euro Turkish Lira again, and then I guess somewhere in the middle of the week, this week, we showed you in 2015. So look at that action. You know, Turkish Lira is trading at 2073 on a Sunday night, and then by the end of the day, going into Monday close, it had a low of 14. Okay, 14.35. So 21 from 14.35 is 6.25. It dropped 6.25 in that day. Now, I showed you his charts. I'm not going to go there and drive you crazy, but I showed you charts of the Swiss back in 2015. Same thing happened on a Sunday night. You know, so one thing's for sure, something weird and wild may happen in the metals complex over the next year and change on a Sunday night. Yeah, exactly. Yeah, just be careful about that stuff, you know. Because, you know, wouldn't surprise me that when they finally do go, oh my God, why do we have $15 trillion invested in minuses? And everybody says, you know, we got to change that. And next thing you know, the German government says, I don't have the money to pay you that, you know, pay you interest. So, you know, and if inflation is 5, 6, 7, 8, 9%, something's going to definitely stir the metal market. Sooner or later, it's got to come to life. You know, it'll be a lag, and we have seen long lags in the metals market, and this will be a 14-year long lag because, you know, the central banks were supportive of it. So, anyway, let's see where we. We need to go. Did we look at the ZAR? Yeah, we did. Yeah, we did. Okay, I see it there. So now let's jump over to the ruble. You can see there, ruble's moving up pretty firm too. I guess that's because Bozo Biden is doing something crazy with Putin. I haven't seen any pictures. I was out yesterday. I haven't seen any pictures of Biden and Putin, but I have to believe, like the last time they had a phone conversation and they put the pictures out about a month ago, oh my God, Putin looked like he was having a blast. He looked like he was laughing, and his body language was very relaxed, and Biden was flailing like a fish out of water. Oh my goodness gracious, it was crazy. All right, there's ruble. You see that strength in it. You see the weekly has bounced back up more. We did flirt most of the week underneath, trying to go into a sell, but in the end result, the strength seems to be coming back into it. Or I guess it's a weakness, really, in the sense. In other words, it's going up. The higher it goes, it's weaker against the dollar. But that's what we seem to be seeing at this point in time. Next, we go over to the yen. They're closed today, I understand. The Japanese markets overall. And let's see right there. You can see there, it's been just a slow drift up, just like it is on Chicago. Right there, slow drift up here, and a slow drift up right there. And looks like last week we went into the weekly buy, and it doesn't look like it's pulling back whatsoever. It's still just slowly marching up, up, and away. All right, and then last but not least, we go over to the Mexican peso. show it to you on J4X. And, let's take a look at the weekly first. Where's the weekly? See, the weekly has drifted underneath right there on the Chicago. Just pressure on that, and then at the same time, where are we at? Over here on the J4X, same situation. It's broken through the dashed line, which we like to call, that's our zero line on the J4X. The dashed line is, and so it's broken. So there's weakness there on a weekly basis, and you can see this is the fourth week of pressure on it. The Hinkies have been going red for 3 full weeks, and this is the fourth week. Then we take a look at it on a daily basis. There. And it has that leaky boat thing going on, just like it does on Chicago right here. See that long, slow, push hard, push slightly hard. Letting gravity pull it back down again. And so it's been in the cell since right here. And this is the daily, same situation. Pushed into a cell, and you see it breaks right there. Down since. So that pressure is on there. All right. Any other questions out there, traders? All right. If not, let's see. We've done the currency pairs we normally do, and if you'd like to see any other one, we can do it. But what we'll do now is we'll go over to the metals complex again. Let's take a look at silver now. There's silver. There. So you can see there, that pressure is there, in the end result. It's at least we got a red and a green. Jumped in the daily buy yesterday again, only one day in the sell, which is nice. And you can see here the weekly actually flirting. It's at 000 at the moment. We were a little bit higher than that at one point. Plot 4 is also a 000, so it's just kind of like wrestling with itself, What else can we say about it right there? J4X. There's the daily, so the pressure's on a little bit. It'll probably straighten up over the next couple hours as long as we stay firm here on the product itself. It will join in with Chicago. And then let's take a look at it on a weekly basis. That I would think it would show even more strength than the Chicago does. I think we've seen that before. I think it's a couple days, a couple weeks in the green. Yeah, last week it was in the green right there, and this week it's through the line. So that pressure is there. Matter of fact, let's take a look at gold to see what the weekly looks like on gold. Now our gold is trying to flirt with the weekly sell, which is really irritating. Really irritating. And so then you have, let's see what we have here. Then you can see it right there. So I would like to see this thing straighten up. So far, it's not doing it. And maybe next week they'll spike it up, and that would be pretty cool. And so it'll just be like an in and out, but it'll stay in the daily buy, and you won't try to get short out of it. So that would be pretty cool. Again, end of the year, anything's possible. We have no idea. You would think that money would come in at the beginning of this year, 2022 now. You would think that they would step up and buy it for a couple of days at the beginning of the year. Just the dollar cost average into it, down. I mean, let's just show you. That's a weekly chart, right? And let's make it the whole screen on J4X. I mean, that is, let's see, where's it at? Where's the beginning of the year? The beginning of the year is right there. There it is. So there's the beginning of the year. I mean, the product is down for the year. So you would think that, maybe dollar cost averaging funds will come in and start to pick up some. So being down like this might have been, a push to try to keep it low so they could try to step up and buy. We'll see. I tried not to get into the conspiracy as much as everybody else, but we we all have to join into the conspiracy things that, because they're so obvious in front of our faces. And when we go and look at it on a monthly basis here on J4X, here is let's widen it out again. So here is July, there's the beginning of the year. We're lower there, and then when we contract it, and you look at it going back to 2019 right here, 2020, 20, yeah, that's 20, and there's 2021. You can see the last couple of years, it's a higher low going on and a higher high. So you would have to think overall that, and even there they take out the 2011-12 stuff, this last move here from the coronavirus. And so, in the end, you would think that maybe there'll be some money coming in at the very beginning of 2022. I don't know, we'll see. Next week it'll be right there in our faces, and we will not miss it, that's for sure. We will not. Alrighty. So, nobody wants to see anything? Everybody's having their liquid refreshments for the new year, I imagine? Like 7-Up and Coca-Cola and root beer and so forth. Having your liquid refreshments. Just watch out for that bad ice cube. Sometimes that bad ice cube can give you a headache. Alright. So, from there we go over to, we've done silver, we've done gold. Let's take a look at copper. See how copper has done out of all this for the year. That's the monthly. Let's just take a peek at it. Now that has been really firm. You can see that. There's, all-time highs, solid, blah, 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 whatever you want to say about it, it is there. They're building electrical devices. They need copper. And you can see here the monthly has been very tenaciously firm. And we saw some profit taking here back a couple months ago, but overall it's been very firm. You can see it's even trying to turn up here on a monthly basis. And let's see what the weekly looks like. I'm sure it looks even more interesting in the sense of it's been sideways since the middle of the summer. July. So the last 6 months it's been up, trying to challenge the all-time high here, and then just kind of sideways. Now you can see the weekly is trying to make a turn up. Let's see. Oh, we can go back to silver. Sure. Let me just show you the copper again. There's the copper. So you can see there, it's trying to get into a weekly buy as we. Oh, you can't see that. Let me just show you this, and then we'll go to silver again. You can see that's trying to turn back up. Now let's go back to silver again. And there it is, right there, silver. You can see that, you would think again, when we go and look at it, this is a weekly chart. And when we go and look at the, let's see, where's the year start? The year starts, there's May, November, okay, right here. So again, silver is also lower. So you would have to assume, and you can see that pressure on it, you would have to assume that this could be, see how this big bottom is for like a decade? You would have to assume that, something like, maybe this is the new bottom. The low 20s. Maybe we won't see a 19 anymore when it comes to silver. Maybe it's done, Just the way like they seem to have developed like a 1,000 base. Maybe we'll never see gold again under 1,000 an ounce. But it's definitely worth, thinking that there's a great potential for the new year in the metals complex at the beginning of the year. You would think, if anything, you would think that would be the time, really, more than anything else. How's that, Jordan? Was that good, and better? Good, and good. Good, and good. There we are. All right. So now, let's see. We've looked at that. Oh, let's check out platinum real quick. See what the platinum's doing. There's platinum, April platinum. It's not going to try to battle its way into a weekly buy at all. Disappointing. All right. From there, we go over to the energy complex. There's oil, and you can see it's putting some pressure on it now. As you can see over here, it's actually, oh, you can't see it. There we go. As you can see over here, it's actually, you know, -3 or something like that, -0.3. Pressure is definitely on the energy side. That's the front month. Let's go take a look at the June contract, the spring contract, basically. New crop oil. New crop oil. All right, you can see here, that's +1 right there. It's holding up, and the weekly looks very firm. 1 week in a buy, going on a second week, and you know, maybe they're giving us some pressure here now. We'll see how they play that out. But new crop oil looks really good. I like to call that new crop oil. Yes, it'll be coming out of the ground in June. New crop oil. All right, so that's the way we're seeing the oil complex. Let's take a look at nat gas. I saw nat gas they pounced on it yesterday. They pushed it hard on the downside. And we'll take a look and see what they're doing in Britain today on nat gas too. There's the American natural gas. And it's trading at 3 point. Remember yesterday we were up at $4. It was flirting with $4 yesterday. It just kind of like got smackoed. Let's go to a daily there. Let's put it up on Chicano. Right there we go. Yeah, we flirted. See that right there? It was at $3.99 even, 3.99.50, something like that. And here we are, almost 50 cents lower. It's like, wow, they really smash-a-doodled that thing. Yeah, you know, I think it does too. You know, and I think that they want to lift this stuff, and you got to figure that they were down for the year, so the natural inclination, you know, my first interpretation of that is, you know, money managers should come in for the metals funds and start stepping up and doing a little dollar cost averaging at the beginning of the year. I think that usually is the way it works. Now, you know, this is quantitative era, so anything's possible. So in other words, whatever does work for like the last 2 centuries, you know, is thrown out the window when it comes to quantitative easing. I mean, quantitative easing has changed the whole complexion. I mean, I can still remember, I've mentioned this like 3 or 4 times over the last 2 years or 3 years on the webinar. I was at a swim meet, okay, and I was talking to a history professor, and I said to him, I said, you know, they're talking about interest rates going minus in the United States, and he said, how would that work? I heard that. How does that work? And this is a history professor, you know. And I said, well, what happens is that you buy U.S. Treasury bond, and instead of the government giving you interest, you pay interest to the government. And he said, no, I don't believe that. I said, well, at that time, I think there was like 13 trillion invested throughout the world in a negative factor, you know, like balloons and so forth. And so I said, well, you know, it's become relatively popular around the planet. And he said, you're kidding. Where do they do that? He's a professor. I said, well, you know, all of Europe, and pretty much is, you know, the ECB is involved in that. I don't believe it. I said, well, okay. I wasn't going to try to, you know, convince him on any level. I said, just check into it, Google it. And I remember a couple of weeks later, he came back to me, you know, I saw him at a swim meet again. He says, you're right. They pay interest. He goes, I can't believe America will ever do anything like that. I was like, yeah, okay. He was like totally convinced. No way in the world America can ever do anything like that. And he's probably right. You know, we were very close to it. We did pay Treasury bills. You know, the 3-month Treasury bills were minus for a little while, which means that everybody here getting Social Security was paying interest to be invested, because you only can invest Social Security in the 3-month Treasury bills. You're not allowed to do anything else. If they would have made the law differently and allowed Treasury, if you were allowed to invest in Treasury bonds, you know, 30-year, 15-year bonds, everybody would get 2 or 3 times more a month. That's right, not like $20 or $30 a month. you'd get 2 or 3 times more a month in income. But because they're committed to only paying interest at a 3-month rate, it keeps it very, very low. So they knew what they were doing when they created that pyramid. They had that pyramid right underneath their thumb. They knew what they were doing day one. But anyway, yep, there it is. You can see the gas. Now let's take a look and see what they're doing to British gas this morning, because it was at all-time highs the last couple of days. GDP, that's the FTSE. There it is right there. And European gas. So they're paying. All right. No, that's not the right product. Is that like a cable thing? Oh, that's BA Systems, the British Aerospace. Okay, here it is, right below it. Natural grid, the natural gas grid. Okay, and you can see here, I think it got as high as 1,100, something like that. It was got very close to it. You see, it's selling off a little bit here today. Excuse me, nothing big, but the natural gas is being sold off just a little bit outside the in Europe at the moment, and that little pressure is on there. So, but you can see the thing has gone from just in the last, what is that, the last couple months, is that right? What is it? Yeah, that's a good one. Yeah, so the last year has gone from 9 to 11, the grid itself. I don't think we get a European actual gas. We'll look and see. I thought that was a little bit more accurate, but let's see. Bonds. Yeah, see, if they would have invested in the, this is a T-bond. If they would have invested in that, things would be totally different. George Bush tried to do something about that. They blocked him. Let's see. I don't see any other gas combination on here at all. German Dex. Dex was 30. There's soybeans. And that just looks like sweet crude. I don't see anything else. Just the grid itself in England they just showed. Oh, you can see it was at all-time highs a couple days ago. Or yesterday or something like that. Anyhow, that's where we are with the nat gas. So from nat gas, we where do we go from here? I guess that's about it. We got the back month of oil we've seen. The front month. Let's take a look at North Sea oil since it's right there. There's Brent. And see what they do with that. You see there, Brent is, off of its highs from just like the U.S. oil is. A little weakness here this morning, but overall it's been pretty firm. You see it's trying to roll over a little bit. Let's see what the weekly looks like. Brent. Right there. Let's see. Brent. Yep, you can see it's trying to perk up just like the way front month oil is in the United States. It's trying to perk up too into a weekly buy at the same time. We've got the back month or June crop oil. June crop is trying to find a way to lift up in there, get some strength. It is kind of funny. And so, in the end, what else do we got going on here? So that's the oil complex. And our weather here is pretty calm, so we're not really seeing a lot of tenacious demand at the moment. But, oh, wait a minute, that's just on the East Coast. I'm sorry. We are getting hit hard out in the Midwest, and we're getting hit really, really hard even further west, and California, they're getting snow and so forth. So they're feeling it, there's no doubt. And I understand that they just got done a full check of all the Texas, I guess they have 302 power plants. And they just got done doing a total evaluation of all 302 to make sure everybody's running right. And so, they don't want what happened last year to happen again. And that's pretty much the scheme of it all, really. So, anybody want to see anything particular? If not, we'll jump over to the stock indices. see how they're looking for the end of the year. Let's put it up on J4X to start off with. You know what, we're going to leave it in a week. Let's leave it in a weekly and put it up on there. So here is the Tech 100, which is the NASDAQ 100 here in the States. We used to call it the Tech 100, but people have just gotten to the point where it's the most active product in the United States now. So it's taken over the position of the Dow Jones Industrial Average. And so the Tech 100 is just called NQs at this point, NASDAQ index. You can see here showing some strength this week. You see it's coming off the lows. You can see on a day-to-day basis right here, a little weaker, I think. Yeah, a little weaker right there. You see it's trying to come down and challenge the line. I know our work right here, where's that? Let's use a different mouse. Our work right here, around here somewhere. There it is. Our work right here, the NQs, have been sliding a little bit for the last couple of days. You see that there, and we went into a sell yesterday. But you can see we're trying to get into a weekly buy. That may be the sign that that they'll be buying next week. That could be the beginning of it. And then the S&P 500, which we always talk about, same situation. Pressing into the sell yesterday, closed in a daily sell. But again, look at the weekly, very firm. Let's put it up on J4X here. Right there. You see our indicator on the J4X holding up in the daily buy with no problem. And let's see what the weekly looks like. I'm sure it's just up and away, basically. Yeah, very firm. So, what we're really seeing in the end result is that the pressure does seem like it's building. For the upside going into the new year. All right, traders. I guess that's about it. We're going to say we will talk to you again next year, and I have to figure out a title to this one. But everybody have a safe and smart weekend. A happy New Year to all, and try not to have any bad ice in your liquid refreshments. Remember, be careful when you're drinking those little sodas and glasses of water. Check the ice cubes. Make sure they're okay. Indeed. All right. Happy trails to you until we meet again in the year 2022. Happy trails to you, to all our trading friends. Ta-ta for now, traders.